we've seen this spike in Bitcoin, and it seems to coincide at the very least with this recent BUSD debacle or situation with the SEC. Do you think that there's some connection there, that this is not so much a rally in Bitcoin as it is a sell-off in BUSD?
Yeah, so I think, when you kind of consider where the rally started, and, of course, it started with the low in November, and it really picked up in early January when it kind of regained that mid-June low around 17,800 and really rallied to a point where up until 25,000, of course, it's likely might have to do with some of those players kind of getting out of BUSD and or even out of alts in general after some of the recent regulatory angles that the SEC is taking. But really, have been flows towards Bitcoin. But ultimately, the rally began, and it's more of a technical rally. And of course, it's one that's against all odds, and one that really came in the face of a lot of uncertainty in terms of what happened post FTX. But of course, kind of as I mentioned throughout many times coming on this show in late 2022, the second half of 2022, is that ultimately the macro conditions were improving. And of course, you had the FTX news kind of slap the digital asset rally in the face, but that kind of moved to the rear view, little contagion, little forced selling to follow. And now you had that technical rally up until, again, a relentless rally that really was 2 weeks of essentially wiping out 5 months worth of gains. So, Bitcoin does rally when those least expect it. And I would consider now the price being above the 200-day moving average as just another signal that, this could be, again, the beginning of a new bull market.
Yeah, do you think those technical aspects of it in part played a role in some of the liquidations we saw? Now, leverage isn't what it used to be, of course, when and during the halcyon days of 2021, whatever it was, when they were just like giving away money, and you could leverage to. Do you think that this is it? I mean, do you think that we're returning to that kind of day when the technicals kind of snowball and lead to these? I don't want to say inappropriate rallies, but definitely rallies that seem to be outsized based on what the catalysts are.
Yeah, well, I mean, don't forget that Bitcoin has perfectly inelastic supply, right? And so when demand rises, and what you saw over even in the bear market in 2022 is that holding trends remain strong, and much people and a large part of supply was really held throughout that bear market. So ultimately, it continues to be more scarce, and when you have that demand, of course, you're going to have these rallies that can really, really take hold. And of course, traders like to get involved. There was some shorts. There were a lot of people that were confident in Q4 that they were going to see lower prices, and I'm sure some of those were liquidated. And now you're starting to see open interest rise across some of the futures and perp platforms, and that's a sign that traders are again entering space. And certainly in the beginning of a new trend, a rise in open interest does show that there is interest in following that trend,
such as on Binance.
All right. So we've got this Bitcoin parabola chart, and so analysts expect a continued move higher, and that Bitcoin could see more than double in value in the coming months. And this information coming from emerging asset groups, William Noble telling CoinDesk that Bitcoin could move from consolidation to another parabolic move back to $56,000. Going parabolic is an expression you often use in the crypto market to describe an expected impulsive move higher with limited downticks. Do you agree?
So I think one gauge and one comparison we can make is really the rally that took place following the 2018 bear market. Bitcoin hit a low in December of that year, and it rallied about 300% from that low into the high in the following June. And so that actually was a perfect 62% retracement from the previous high down to the previous low. And so when you kind of consider that and you kind of take that playbook, a 62% retracement, of course, there will be volatility on the way, but that would bring us to around 48,000 if we were to retrace a large part of the pullback that we saw. So ultimately, I think that this rally is ultimately just beginning. And just as we said earlier, it can really take hold, and especially if equity equities continue to remain strong and ultimately illustrate that the market is in fact better than what many have feared. And I think that the relative value of finding crypto off of its highs as equities continue to perform relatively well, I think that will kind of lead to further flows into crypto because it's still off of its highs significantly.
Where do you say further flows into crypto? Are you talking basically the two majors, ETH and Bitcoin, or are you throwing in the alts too? I mean, it seems like there's been a shakeout in the alts a bit. Some of the, everyone seemed to have a layer one that had to have a coin, but I don't know, Solana's having a tough time relative to where it was a few months ago. What do you think is going to happen there to the alts?
So I think that, when you kind of consider every bull and bear market, you kind of look at the top 10 and there is a lot of change that occurs through each cycle. And I think that ultimately that will slow. However, bear markets do kind of weed out the weak, and those that deserve to stick around, those that have the use case, those that have the strong teams behind them should continue to move forward. And ultimately there are staying, there are many. I know you mentioned some of the layer ones, some of the comparisons against ETH, but there are some layer twos that have stuck around. The DeFi 1.0 is still leading in terms of the DeFi sector. So, I would look at the market leaders there, and certainly look at the developing team, certainly look at the kind of total addressable markets they have, and really kind of the fundamentals you could find. If it's a DeFi, there's certain fundamentals there: borrowing, lending, aggregated volume, for example. But really, I think the smart contract. A lot of people got in because it was a bull market thing. They saw ETH have, incredibly attractive returns. New smart contract platforms came along with the promise of faster transactions, cheaper at a cheaper cost. But ultimately, these are smart contract platforms that have decentralized applications on them. And users need to utilize the decentralized applications for it to be a real smart contract platform. So if there really are no applications on there, ultimately at the end of the day, what value do they have besides, it's a lower market cap, and I think it's going to rally alongside Bitcoin and ETH. So I'd be wary of kind of going overexposed. Again, Bitcoin first, ETH second, and then you can layer in some of the leaders, but I'd focus on the leaders and I would keep them kind of relatively small.
Any leaders in particular that you would focus on?
Yeah, I would look at the scaling solutions, those that continue to outperform. I like the EVM compatible specifically, and I also like DeFi 1.0 that continues to be the infrastructure around everything else that is happening. Now, of course, keeping an eye on the regulatory side of altcoins is certainly important, and those position sizes, again, need to reflect the risk that there is. But ultimately, if you are kind of a more aggressive investor within the space, you do want to own some of those altcoins because, again, of course, they're smaller in comparison, and they do have a large addressable market ahead of them, and they're slowly disrupting those traditional industries. But again, you want to be predominantly Bitcoin and ETH.
All right. Joe, thank you so much for your analysis. That was digital asset strategist Joe Orsini.